To better discuss the situation of those commodities, joining us Mr. Vijay Valecha, Chief Investment Officer at Century Financial. Welcome, Mr. Vijay, for always being with us. Let us first start with the movements and the price of gold, the record highs. Of course, today, probably everybody is wondering about this rally that you are witnessing today when it comes to the gold prices, in addition to the expectations by the international banks that are still giving some very positive expectations and the figures that we might be talking about. However, let us talk about this period of time where we might have these record highs reaching around maybe $6,000 as expected for these banks. What's your take on this?
Well, absolutely. We saw that most banks had predicted a 5,000, 5,250 for the year of 2026, and that number's already been reached. We touched 5,300 today. The target's now extending towards 6,000. I do believe that the rally is so strong on gold that we can actually see even 7,000 this year. It's a really, really high possibility. On the side of silver, the rally is even more magnum opus. It's actually become so fast that, we can even see 150 in probably a 2 or 3 week span. It's a really, really fast rally. It's extremely volatile, but yes, the upside looks really, really bright for all the metals.
Mr. Vijay, as you already know, all the investment banks and at times are always following the trend. We have reached the goals of the year in the first month, and now we are even increasing the expectations for 2026. Mr. Vijay, today, if we are to have a chart for gold and silver and looking at the chart and looking back 4 to 5 years where we didn't have any of the other assets, do you believe that there is we might read that there might be maybe a third world war or maybe the bankruptcy of the US? It is that risky for us to read what's happening on the gold if we're not reading the equity market. But at the same time, we can see that the US equities, the bonds, whether we talk about the treasury or the corporate bonds, are still stable. So what's happening today so that we can have these record highs today?
Well, overall, we are seeing a situation where gold and silver and platinum, palladium are moving as if there actually is, if not a world war, there's definitely going to be extremely heightened geopolitical situation, something that we haven't seen in the past decade or maybe even 2 or 3 decades. So definitely the geopolitical situation is very, very tense. The dollar has not been so weak that we have seen it. We saw the euro touching 1.2 yesterday as well. So we are seeing the dollar breaking down. We are seeing the US Treasury sell-off coming in. At the same time, we see that the equity markets don't get impacted at all. So from an investor's point of view, if you think that you want to get into silver or gold right now, it becomes very difficult. So we are hitting new rallies every day. At the same time, anybody who's, let's say, an investor wants to get in on silver at 115, 114 levels, the upside might just be 136. So it must be just be a 20%. And the way it actually has moved so far to the start of the year, a 25-30% drop on silver in a single day is so very possible. So it makes sense that it is actually a trader's market right now and not an investor's market, especially when it comes to silver, platinum and palladium. Gold, however, can still be considered as an investor's market given the geopolitical situations are not getting any better. And that situation does look that it can get much worse going forward.
Mr. Vijay, let us talk, of course, about the oil prices and the developments of the energy prices. We have some statements saying that U.S. officials are talking about increasing or maybe lifting some of the sanctions that are imposed on Venezuela. We have read some figures. What could be the possible scenarios amidst the developments, whether we're talking about the geopolitical tension that are still stable when it comes to the war on Iran, which hasn't been pulled by the U.S. To what extent do you believe that this will have a larger impact on the prices of oil in the upcoming future?
I think the sanctions lifting will have an impact on the immediate supply, but overall the Iran tensions are a much bigger impact on the oil prices. Oil is up around 10% for the year, while we have seen that the dollar has been plummeting downwards. So essentially on the commodities space, oil has still been a laggard for the year so far. But we expect that to change very, very quickly. We do expect that oil can see an upside of almost 80 to 82 in the coming few months, similar to the move we saw in March of last year, where the prices moved almost to 80, 82 on the WTI, 85 on the Brent, spiking up from geopolitical tensions. Similar tensions are rising up now. So from an investing standpoint, it does make a lot of sense that oil is still underbought territory and is a good investment at this point. However, that being said, the demand for oil is not really picking up. And the supply issues or supply concerns that can be increasing from Venezuela could be coming in. However, I feel the actual supply to come in from Venezuela will take a lot more months than what is anticipated currently.
Thank you very much, Mr. Vijay, for being here with us. Thank you.
Thank you.